Today, playing the mortgage game right. Hello again, it's Martin North from Digital Finance Analytics, one that is post covering finance and property news. I'm joined tonight by Anny from Joust. Hi there.
Hi, Martin. How are you today?
Yeah, pretty good. How are you going?
We're good. We're good. There's a lot happening at the moment and lots of
Absolutely.
people on different types of mental spaces at the moment. So
Yeah.
I think it's a really interesting time for finance.
Yeah, it is, isn't it? Well, we've had the interest rate rises, of course, and Joust is a platform that potentially is a different way of thinking about the mortgage refinancing and the mortgage application process. And I guess, to my mind, and I see it in my surveys, a lot of people are still trying to figure out how best to refinance their mortgages, particularly with the high interest rates. So, therefore, the whole question of mortgage refinancing is a big conversation at the moment.
It is, but it's also we're finding that on our platforms we're engaging with consumers that are completely shocked with what they're seeing of what reality is looking like from where they're coming from. We're finding that consumers are probably we've got some very much in denial that when they come off their fixed rates, they're going to not move so far from where they were to consumers coming on board and going, gosh, that was this is night and day to what I was actually on previously. And then you've also got the new borrowers in the marketplace too, where they're finding that as much as they've worked so hard to save up that money to buy that house, they're in a position now where affordability of the repayments are different to what their expectations are too. There's a lot of, I guess, reality bites moments for our consumers at the moment. But at the same time, I guess from a broker perspective on the other side of our marketplace, we're finding that our brokers are getting prepared for consumers coming their way and having really difficult conversations around readjusting their financial needs, readjusting their financial structure, and having those conversations that they're probably not wanting to have either with the new consumers and coming through the platform, and also consumers that they're re-engaging. So it's a really interesting play. And as you know, Joust is a two-sided marketplace. And what we actually do is we join the consumer with a really hot need for a home loan and needing to someone to talk about their financial needs around their home loan needs first. And then we've got the supply side, which is filled with brokers and lenders on our platform that we match together with their needs. And in reality, Joust Marketplace is a really good place for a bit of knowledge around what's happening in the marketplace in relation to different rates, different structures, and different lenders. And what we're also finding is that consumers are also not so loyal to their traditional main banks anymore, because in reality, everyone's got a burning need that they need to resolve. And we've got the rise of the non-bank lenders and the rise of the broker market, where we feel as though that's where consumers are going to turn to find that alternative use of looking for their needs for the home loan solution.
Yeah, and I think it's important. There's a much bigger market out there than many people think. It isn't just the big four majors. And of course, the big four majors have recently started to hunker down on some of their lending. They've given up on these cashbacks and all those situations. Also, of course, some are now extending the life of the mortgage. Oh, well, take it out 40 years as though that's somehow a solution. And I worry sometimes that the easy solutions that some of the big players are offering aren't necessarily in the best interests of consumers.
I think that's probably providing a solution to a very short-term need and also a pressing need from the consumer. And I think also, lenders can be quite reactive in the way that they're I guess repackaging up their home loans to be able to provide that service to consumers as well. And I think I've been in banking for the last 20 years, and I've seen a shift between banking products being so rigid to now some lenders going, yes, we'll go up to 40 years because that will help with their repayment and maybe prolong their home loan journey a little bit better. But then on the other side also, it's a very short-term view to do that. However, you and I both know that, a 40-year mortgage is a massive commitment. I don't think people think about that when they enter marriages these days. And in reality, if you think about it, 40 years, it's most probably just adjusting the parameters for the now. But I think that, we know that, I guess, the average home loan, before someone restructures or refinance or sells and pays out their loan, is roughly on average around about 5 or 6 years, right? So in reality, it's not, is it really relevant that lenders are changing their criteria from 30 years to 40 years? It's more along the lines of they're answering the consumer needs to kind of ease through the repayments a little bit more, because I guess they have a view that no one's going to have a home loan for the next 40 years or 30 years.
Yeah, and it does, of course, it gives people a little bit of wriggle room in the short term. Although it must be said that people who haven't checked their current mortgage rates may well simply be able to find a better rate out there in the marketplace, because I've been quite surprised just how much of a deep discount there is available now for many mortgage holders, particularly if they do hold some equity in their property and if they've got a pretty good credit and repayment history.
How's the world changed in the last 2 years, right? Yeah. So now that, cash is king, equity is king, whereas 2 years ago, you could probably, borrow to buy a home loan and get a home loan and buy a house with, a few bucks in your bank account. Now, and you weren't getting much return on a term deposit, for example. So, gosh, the world's changed considering, I think the thing here is that we have a very short-term memory when it comes to financial stress. Because, you and I can talk about things like, do you remember when interest rates were 17, 18% in Australia? Do you remember when the GFC hit and you could see the interest rates, you're paying, the high rates for your home loans. And in reality, if you talk to people like you and I, we go, well, in reality, the rates are sitting about 5 or 6% at the moment. And we go, oh, it's not that bad because we've been through all that. Yeah. But in reality, you've got the new movement of the new borrower in the marketplace. They're basically your millennials, they're your Gen Ys, for example, and they haven't lived through all of that. I'm not saying that I have completely either, but at the same time, they've never seen interest rates rises, and they've never seen the fact that how can it go from borrowing at 1.89%, for example, and now today's reality of 6%. It's a real shock to the system. But I think, one of the things is I think the consumer now is heading towards online places like us. And I think this is why Joust is the market leading platform when it comes to consumers looking for a better rate. It's because of the fact that they can't have the luxury of time to tab shop, to go around and research multiple websites and maybe get a friend to refer a few banks to them. In a place like us, I think this is the red that you'll see the rise of our marketplace, is the fact that the consumer is needing a product like ours in the marketplace, because it's a one-stop shop for them to see all lenders and at the same time be open to also seeing other non-lenders in the market that are offering maybe better deals or better structures for them.
Well, it does put them much more in control, doesn't it? Because it gives you a much better access to a broader range of lenders and a broader range of products than if you go directly to a mortgage broker. They'll be assigned often to a few lenders or a few product types and may not necessarily have access to the best deals out there. And I suppose you've created a marketplace, which means, of course, then you've got brokers and lenders who are effectively have an interest in trying to actually, capture the business that's coming through. So it gives them more of an incentive potentially to offer, the best deals, the good deals there. And you make an important point too about online. I know that some people worry about online, but this is a good example when actually being able to do things quickly and online really gives you direct access and much quicker access to the range of products. And you can get decisions done pretty quickly too.
Yes, well, the thing here is we know that 9 out of 10 consumers shop online for almost everything in their lives, right? Particularly when it comes to their home loan journey. The other part is that we're being a two-sided marketplace. We're able to, answer the burning needs of business acquisition for a broker. and versus also the consumer needs, which is they want now. They research, they want now, and they want to be instantly connected. That's the world of digital customers, right? And when you've got a world of, of mostly, consumers that are shopping online for everything that they do, and you've also got a market where I suppose, over 70% of consumers are now going to brokers for their home loan needs. So therefore, we've got a market in the place that where brokers are asking, where else am I going to find my customers from? Because of the fact that the traditional values of going out there, one, dining your account solicitors and lawyers, business developing, and hoping 6 to 12 months' time that those relationship might pay off with a referral of a customer. You've got 19,500 brokers out in the network that are trying to do the same thing, which in reality, they should be accessing the fast speeds of the consumer, because the consumer now, they're savvy, they're online researching, but however, they want now. So the reason why Joust Marketplace has been created is because we're capturing that high intent consumer. And then in the moment that they want to make a decision of just having a conversation, we've also backed our platform up with a stack load of great brokers and lenders on our platform that are ready and wanting to connect with consumers now. So therefore, you've got two sides of the market really connecting and speaking to each other at the right time. And that's the best thing about technology. We've built a platform to actually, answer those desiring needs from a consumer, but also the broker perspective. And I think one of the things is what you said, the technology piece and consumers being online more often now, it's becoming more and more apparent that, with everything that we do in life, we need to be online. And I know it scares a lot of people, but at the same time, the people that it scares is not the market that are shopping online for mortgages, for example. The market that is shopping online for mortgages, they're a bit more tech savvy. They do their research. They're a bit more security conscious, all that stuff. So therefore, you marry that up with the supplier chain, which is the broker and lenders on the market, and they're also very savvy around the security side, around making sure that their risks and compliance are all ticked off. So it's a wonderful place to be, because it creates a secure environment and also platform where people can actually feel safe to talk to each other.
Yeah, I think that a security issue is really important, because I know a number of people are still quite nervous about some of the platforms that are out there. And practically the way it works is that the prospective mortgagor is looking for a mortgage, put the information in, and then essentially there's a bit of a sort of a bidding, analytic process going on behind the scenes. And when the results come back, how do they actually come back? Are they stacked in terms of the cheapest, or is it a bit more sophisticated than that? And is it looking at, for example, flexibility and those sorts of things? Or how do consumers determine the selection criteria?
That's a very good question. So we didn't build a vanilla platform. So our platform, basically, it's not about the cheapest rate. It's about the fact that when the consumer puts in their data points and what they're needing out of a home loan, it's not necessarily the cheapest interest rate that's going to win that customer in the marketplace. And at the same time, what we've done is we've structured a formula behind the scenes where it doesn't rank by rate. It might rank by the fact that it might be rate driven. But it also factors in the cost of having that loan as well. So then it puts in the comparison rates, all that stuff, and it stacks it all up according to what we think is actually the best, product that will suffice the customer's needs. So because we're talking about customers' needs and their journey on looking for a home loan, it's like when if you're craving for an apple and you walk into a fruit shop and they go, have a banana instead, you're not going to like that, right? So in reality, the platform's been created around the customer need and what they're looking for, and it ticks all the boxes around. If, say, for example, you jump on and you want the best rate, but you also want the best fee structure, because what happens is some lenders could give you the best rate, but they might load it up with fees. In reality, it will then impact your bottom line of what your payments are per month as well. So we take that all into account. and we rank it based on what we think is the best suitable product for the customer, according to all the mathematical structures that we put behind the scenes of all the product pricing, the fees and charges, how long that loan goes for in relation to the offer. So it might be an offer of 1 year versus an offer of 2 years, and we average it out for them. So all the hard work's been done behind the scenes.
Yeah, and that algorithm, I think, is the secret sauce, really, that makes this so interesting insofar that it really does come back with some, very valid options and alternatives people consider. And typically, in the current environment, if you're refinancing, what are the sort of savings that you're seeing out of the platform once people actually go through the process?
We see from anywhere from between hundreds of dollars to thousands of dollars. And it depends on how the loan was structured, and it also depends on, I suppose, how they've structured their securities, or if they've improved. So say for example, if I was on a non-conforming product because I so wanted to buy that first home loan, and that first home, because I did nothing, didn't want to stop at anything to get that home, and I borrowed up to 100% of what the home was worth, for example. And therefore, we know that the traditional banks wouldn't have approved a loan like that for myself, for example. So in reality, let's say, for example, when you go to a product like that, you are guaranteed that you might end up paying more fees because of the privilege of borrowing up to that high LVR. The other part of it is that you're probably also paying for the privilege of an interest rate that reflects the high risk profile of that product as well. So you can see that a product like that then, let's say, for example, I've spent time paying down my loan, everything that I've saved for, and, after this, I've reduced the level of debt that I've got, which in turn lowers my lending value. So what that means is that I can then go to market, and on Joust, you'll have lenders that will fight for presenting you the right deal according to your profile. And you'll find that from there is that we've got consumers that have saved anywhere between $500 or $600 a month to thousands of dollars a month, depending on what structures and how big their loan sizes are. So we've got a lot of smart lenders on our platform. We've got a lot of brokers that represent so many different products in market, and also products that you and I probably don't see advertised on TV or in the newspapers. Who picks up the newspaper these days? But on our normal rag research. And that's the reason why we find that consumers go to brokers, because they represent anywhere between 20, 40 products in the marketplace. And they're really savvy of maneuvering and restructuring for our consumers as well. So yes, it's a bidding process, but at the same time, at the end of the day, what we've created is actually there's also a human piece of our platform. So once a consumer actually enters in their data and puts their home loan on the market, we've got then suppliers, obviously, competing for that consumer. But once that match has been made, what we know is basically the consumer intent needs to be held, right? So then we've got a specialist team that holds that customer intent, that talks that customer about what else are you looking for? How else, what other pain points have you got? To which what we know that in the broker market is that not all brokers actually know how to deal with digital customers really well either. So the conversion rates are low. The conversion rates to conversations are low. And at the same time, we find that, that then they call it, a bad experience, because they find as though the consumer intent wanes for every time that they pick up the phone and talk to that customer. And we find that there's a lot of wastage of time and cost in there. So the reason why we've created not only this platform, but we've created a human piece there so that the consumer actually talks to a human being, not just to a platform. And then they basically, go through the process of understanding that customer and then making sure that the match that they've got on the platform is the right one for them. And then transferring that customer to a qualified person that can take them from that point of their journey and onwards. And don't forget, the other side of this is that consumers want value, right? And the other part of that value means is how am I going to be treated as an individual to my individual needs versus just what's my profile on online. And in reality, that's where that's what makes us different from coming from a digital platform to then putting a human face to it at the back end of it, to making sure that we are talking to our people. We're talking about the consumers as our customer. We're making sure that they're being transferred to partners in our platforms that really care about them, because we know that consumer intent, whilst they want to be valued, whilst they want their needs to be met instantly, they also lose interest very quickly as well. So that is it's a seesaw approach, and it's a fact that we've gotten the formula right in relation to making sure that when we engage with that consumer and when we actually transfer that consumer to a partner that's willing to engage and help them.
Yeah, and I think that's very important. This is a journey, isn't it? And what you're doing is facilitating that journey, helping people make better decisions, which can save them quite a lot of money and perhaps take some of the heat out of the current pressures. But that isn't just about the cheapest or just fully digital. There is an important process there that you've been architecting, which means that there's a much higher probability of the journey being successful. And that's really important, because I know from my own surveys, the number of people have been burnt with these various online platforms simply because basically the ball is dropped somewhere along the road, right? They're relying on the digital to do it all. And sometimes digital doesn't quite work without a little bit of extra support along the way.
But absolutely. But on the other side also, it's in financial services, this, it's all about relationship, right? And not to mention, it's not only just about relationship, it's the biggest decision that you and I would make in our lives, apart from marrying our wonderful partners, for example. But in reality, you're asking someone to trust you with hundreds of thousands of dollars or even millions of dollars of trust in getting it right for their home loan needs. But a home loan is not just about a home. It's about the financial goals behind that. It's about what they want to do next. And it's maybe the second or starting point of a consumer's journey of finding financial freedom. So it's a massive journey, and you need to go back to the grassroots of just relationships as well.
Yeah, I think that's a very important message. And, I sometimes get frustrated when everybody says, well, it's all digital, but yeah, you still need the relationship bit, because ultimately, you're right, these are really big decisions. People are actually quite often entering the whole discussion when they're under pressure because of the financial situation that they're in, because of rates of change, so that they need a little bit of a guidance hand as well as just the digital platform. So it's good to see you've got the two things wedded well together. Now, if people want to find out more about Joust, where do they go?
Oh, that's really easy. The word Joust is really cool to spell, right? Joust. So it's joust.com.au. Really easy, hop online. In reality, with whether you're a broker or whether you're a consumer, this is the world where we bring you both together and make it work for a relationship that will last for many years.
Anny, thank you very much. Really appreciate your time today. And, to underscore this once more, many people are in the process of trying to find a better mortgage. They should go have a look at Joust, because it's certainly, to my mind, one of the most interesting propositions, and for all the reasons we've discussed. Thank you very much for your time.
Thank you, Martin, because we do believe that it's a real privilege to help consumers through this, because it's really personal.
Absolutely right. Thank you very much.
Thank you.